For Social Security in 2019, we're going to throw some Medicare in there too, my friends. And I'm going to look at Elaine Floyd's horsesmouth.com. What she does on horsesmouth.com is a savvy Social Security and savvy Medicare planning for financial planners. And she has these wonderful seminars or webinars, however you want to call it, that is just must read. And so every year Elaine updates this stuff. It's just must reads for sure. And I'm going to share it with you today. So we're going to do a couple different ones. We'll probably do one live maybe Wednesday, I'm thinking, the updates, a little bit more detail about Social Security. This will be just the updates on 2019. The one we do going forward will be a real, just a big time webinar on Social Security planning. So let's dive right into this because Elaine is wonderful. I interviewed her actually back in probably August. And she's over 70. She's on Medicare, has personal experience with Medicare, also a widow and a divorcee. So she has experience with her own retirement benefit, her surviving spouse's benefit, and her ex-spouse's benefit as well when it comes to Social Security. So, and she also has some medical, I don't want to say ailments necessarily, but she needs some certain kind of prescription drugs. And she's sharing with us the issue she had going into that to get those prescription drugs for someone who's on Medicare. So it's interesting stuff. So, all right, let's dive right into this, my friends. We're going to hit screen share. And we're going to go to application window. Here we go. And we're going to share this guy. And we want to go right into this. So these are 7 things. What's new with Social Security, 7 topics to watch in 2019. And so here are the 7 things that are new. Let me click off that. Number 1 is cost of living adjustment. Number 2 is a 2019 earnings test. Remember, earnings test, if you're taking Social Security before you reach full retirement age, you do get your benefit reduced by a certain amount if you make over a certain threshold of income. Number 3, Social Security taxes, payroll taxes and benefit taxes, one of my fun ones. Number 4 is Medicare premiums. Number 5 is, dude, kill me. Number 5, my phone's ringing, is Medicare dates to watch. Number 6 is status of the Social Security Trust Fund and proposals for reform. And then number 7 is update on the claiming strategy. So let's look at the cost of living adjustment first. We get higher Social Security wage base. We get a new earnings test threshold, and Social Security checks are going up by 2.8%. And so if we go down here, our cost of living adjustment is 2.8. And let me give an example. If you had $1,000 as your benefit, you're going to get a $28 increase per month. All right. If you had a $2,000, doesn't say if you had, well, doesn't say 2,000. If you had a $2,200 benefit, you're going to get a $6,160 increase per month. And so this is what I'm talking about. One of the reasons you delay taking Social Security isn't just because you're going to make more, but you're going to make more per dollar in terms of real dollars when they increase it for cost of living adjustments. So instead of getting $28, you're getting $61. And that grows more and more rapidly each and every year, as a matter of fact. And then maybe partially absorbed by Medicare premiums. Yeah, you think Medicare premiums. Anyway, here's the perspective of the cost of living adjustments for Social Security. We can look at 1988 is up 4.2, 1994 is up 2.6. 2010-11, 0, 2016, 0, 2017, just a fraction, and then this year is 2.8. Historically, is 2.6, and the projected COLA from the trustees is as well as 2.6. And that's actually what I use in my planning for Social Security increases. I use 2.6 cost of living adjustment. It is based on the CPI, the Consumer Price Index for urban wage earners, all right? So that's not necessarily applicable to everybody, especially retirees, but it's wage earners, urban wage earners who are in what's that? Not reception, kind of working in office buildings, if that makes sense. That's what they're using on clerical. They're urban wage and clerical workers. That's what they call it, where they're basing their cost of living adjustments on. All right. So now the earnings test. Now remember, the earnings test applies to people who are under full retirement age. That means if you're under your full retirement age, it's either 66 or 67, depending on when you were born. If you're born in 1960 or beyond, your full retirement age is 67. If you're born before 1960, your full retirement age is 66 and maybe some months. If you work, have earned income before you're at your full retirement age, you will have your benefit withheld from a certain amount of money. In 2019, you'll have $1 in benefits withheld for every $2 you earn above $17,640. And if you're in the year you turn full retirement age, you'll have $1 withheld for every $3 you earn above $46,920. So once you are retirement age, not that big of a burden. Before that, you are going to lose benefits. Now, you don't lose them forever, as I always say. They do repay them back once you hit your full retirement age, but not in one fell swoop, mind you. They do it over the course of your remaining life expectancy. First year monthly earnings test, you file for Social Security in 2019. You're under your full retirement age. You continue to work. Your benefit will be held for any month that you earn more than $1,470. Just keep that in mind. So if you're earning $2,000 a month for the amount that you earn above $1,470, you're going to have your earnings withheld. It's just that simple to some degree. Again, they do pay it back. Payroll taxes in 2019. Let's talk about this. A maximum earnings subject to Social Security tax this year is $132,900, which is up, what's that, $4,500 from 2018. All right, so once you break 1329, you don't pay any Social Security taxes. No more social. You still pay your Medicare, but you don't pay Social Security. Payroll tax rates are unchanged. Tax rates remains at 6.2% for you, and then 6.2% for your employer. And if you're self-employed, 12.4%. Medicare is still 1.45 for both sides, so 2.9. It doesn't matter. There is no earnings limit at Medicare. You're going to pay it on the entirety of your income. Maximum Social Security tax. Well, we just talked about right there. So the maximum you're going to pay in Social Security taxes is $8,239 because the maximum that you pay is 6.2% on $132,900. So you will pay no more if you're a W-2 employee than $8,239. If you're self-employed, you'll pay no more than $16,479 because you're paying for you as the employee and you as the employer. Again, that just means you have more money because they're going to use that as part of your average index monthly earnings for sure. All right, taxation of Social Security benefits. This is where it gets fun. Let's make that a little bit bigger if I can. Right there. Married filing jointly. Oh, this hasn't changed. Okay, well, I guess I can. Well, can I make that bigger? Maybe not. Oh, maybe. Oops. Let's go here. I gotta go down a little bit. There we go. Well, we'll do that for the time being. Married filing jointly, nothing has changed. This exact same thing has been since 1983. Your provisional income under $32,000, married filing jointly. None of your Social Security benefits subject to tax. If your provisional income is over $44,000, up to 85% of your Social Security is taxed. That has not changed since 1983. And your provisional income, again, is your AGI. That's all of your income to include tax-exempt interest plus 1/2 of your Social Security benefits. Drives me batty. All right, let's see here. What's oldest boomers collecting our required distributions? Leading edge baby boomers started turning 70 and a half in 2016, which means their IRA required distributions may dump them into a higher tax bracket. Interesting. I wonder if anyone's been talking about that. Oh, that's right. Your old buddy Josh. Heading off Social Security benefit taxes. Tip 1, draw down your IRA in advance of turning 70 and a half. Wow. Who said that? Your old buddy Josh in my book, The Tax Bomb, which I'll put a link in the show notes. Number 2, convert to Roth. Yes. Number 3, delay taking Social Security to reduce the number of years your income is subject to taxation. The 3, I actually like all 3 of those, as a matter of fact, and you should do all 3 for sure. TCJA, the Tax Cut and Jobs Act of 2017. Major tax reform took effect in 2018. People are still adjusting to the lower tax brackets, a higher standard deduction, and limitations on itemized deductions. What to do now? Fine-tune your withholding or estimated taxes for 2019. Talk to your tax advisor and go to taxpolicycenter.org for updates. Okay, that's interesting. And I would add, look at your 1040 from the previous year. I mean, you have to start there. I mean, if something has changed, by all means, that won't be a huge issue. But if nothing has changed, you're still a W-2 employee, you need to look at your 1040. Don't assume you're writing off your mortgage interest, by the way, and don't assume you're going to get any charitable deductions, because standard deductions are higher. The vast majority of people are not going to itemize anymore. In fact, Elaine does talk about go to taxpolicycenter.org. I like the taxfoundation.org, actually, so go there as well. All right, so let's talk about Medicare. Your Part B premium is $135.50 a month. Some people will pay either more or less than that. It is hold harmless, and we're going to talk about IRMA. So we're going to talk about all that going forward. $135 a month is your Medicare Part B. What is a hold harmless provision? It applies when Social Security COLA does not cover increase the Part B premiums. Did not apply this year because Medicare premium went up by all of $1.50, whereas your Social Security COLA went up by 2.8%. Some people may still be held harmless from years past. I don't know if she talks. Did she talk about that at all? No, I guess not. IRMA, income-related monthly adjustment amount. Man, could that be any more just government bureaucracy talk? Additional Medicare premiums if MAGI, modified adjusted gross income, exceeds $85,000 if married, or $170,000 if married filing jointly. Your modified adjusted gross income is your AGI, all of your gross income plus your tax exempt. So remember, if you have $85,000 of tax exempt income, you are going to have MAGI above $85,000, which means you'll have additional Medicare premiums. Premiums based on MAGI reported 2 years prior. So your 2019 premium will be based on your 2017 tax return. Can appeal if income has changed due to life-changing events such as retirement. Unusual capital gains are not ground for appeal typically. Income thresholds are not adjusted for inflation. Isn't that great? The NII, the Medicare, the net investment income tax was, thankfully, due to Paul Ryan getting that in the thing, the agreement he made with Obama in 2015, when they initially signed the ACA, the Affordable Care Act, i.e. Obama. It was not adjusted for inflation, the net investment income tax, but IRMAs are not adjusted for inflation either. It sticks at $85,000 and $170 for your Medicare premiums to be tax higher. Yeah, nuts. Or not tax higher, but to pay higher Medicare premiums. All right, so 2019 Medicare premiums for Part B and D, and we're I don't think I'll be able to, oh boy, all right, it's gonna be tough to see there. So we got well, here, this is what I'm talking about. So if you're single and you have $85,000 to $107,000 in total modified adjusted gross income, you're going to add $54 to your $135 of Medicare Part B. You'll add $12 to your $40 of Medicare Part D, which means your total premiums for Part B and Part D will be $242, which is significantly higher than what it would be if you did not have that. So let's take a look here at what those, you got 242 minus 175 divided by 175. That's oops. 242 minus 175 divided by 175. Oh man, hold on a second. 242 minus 175 equals divided by 175. That's a 38% increase, my friends. You got to keep that in mind. You got a 38% increase if your modified adjusted gross income goes above $85,000 and you're single, i.e. the widow's tax trap. Medicare dates to watch. Let's take a look at this. Now, this is new. New Medicare Advantage disenrollment period. You can switch from Medicare Advantage back to your original Medicare. Make sure you get a supplemental policy because you may be subject to underwriting. All right, so up to January 1st to March 31st, because of the confusion of the various Medicare Advantage things happening here, you have the open enrollment in which you, or I don't know if the open enrollment, disenrollment, I guess, to drop your MA plan and to get back to your original Medicare, but it could be subject to underwriting. So make sure you can get the supplemental policy before you drop it, i.e. go through underwriting first. Medicare general enrollment period. If missed initial or a special enrollment period, you can enroll in Medicare now and coverage starts July 1st. A lot going on there, which you're not going to really get into here. Here's your open enrollment is October 15th through December 7th, pretty much the same every year. If you have Medicare Advantage, you can switch plans effective January 1st. If you have original Medicare, you can switch drug plans effective January 1st. I don't know if that means you're going to switch Medicare Advantage plans throughout the year. I don't know. I know you can't get solicited, but I don't know if that means you can switch MA plans or your drug plans, Part D, throughout the year. It looks like it's saying that to me. Plans change. Compare your current plan with others available in your area, and basically put your. I'd rather have an anvil drop on my head. So I would actually talk to an expert on this stuff, simply because there's just no way a common person can figure all that stuff out. You got to talk to an insurance specialist. That's what they do. That's what they know. They have the software to be able to tell you what you need. Future of Social Security, the trust fund, old age, old age disability income, old age. What's S stand for? Disability income. I'm drawing a blank. OSDI is still growing. The trust fund balance at the end of 2016 was 2.848 trillion, and now the trust fund balance at the end of 2017 is 2.892 trillion. So that's good. I mean, we want to see that growing. The long-term projections without reform benefits fall to 77% in 2034. If you didn't know that, where have you been? And then you can see there in 2090, it's going to be hard to see. It'll fall to 73% of this drop from 77% in 2090. So it's not going bankrupt. I just cannot stress that enough. It's not going bankrupt. What would it take to restore solvency to the system? Some proposals. Increase maximum earnings subject to Social Security tax. They always talk about that. That's just not going to do much. Raise the normal retirement age. That's what I say. Raise it till 70. If you're under 50, even your old buddy Josh, raise it to 70. That's just all there is to it. Raise the normal retirement age, the full retirement age. We know this. There's no excuse not to know. All right, so let's take some new rules with the claiming strategies. File and suspend is gone as of April 2016. For those of you who suspended before the deadline, be sure to have your spouses file for their spousal benefit at the appropriate time. Your delayed credits adjustments will automatically resume at 70. So file and suspend, again, that is gone. You can no longer file and suspend. And if you have done that, be sure to have your spouses file for their spousal benefits at the appropriate time. You got to make sure they do that. That way, once they hit 70, they can get their own benefits with their delayed earnings credits. All right. Claim now, claim more later. Only if you were born before January 2nd in 1954, you can file a restricted app. If so, you may claim on your spouse's record, even if your own benefit exceeds your spouse's benefit. Got tons of videos on restricted app. But again, if you were born January 2nd, 1954 or after, the restricted application won't apply to you. Claim now, claim more later. Here's an example. John is age 66. His PIA, primary insurance amount, is $2,400. Jane is age 66, and her PIA is $1,600. Jane files on her own record at 66, which is a $1,600 benefit. John also files on Jane's record because she is a spouse, and he will get his spousal benefits, which is half of her PIA, as long as he's at his own full retirement age, which in this case he is, and he was born after or before January 2nd, 1954. A lot going on there. But John's benefits bills for 4 years of delayed earnings credits. So now he files at 70. He leaves his spousal benefit of $800 a month and instead gets 32% more on his own benefit, which would be $3,168. If then that Jane outlives John, she'll receive this amount right there, the $3,168, and she will lose her own at $1,600. That's the restricted app. And again, a lot going on there, and very, very few people qualify. Just keep that in mind. Real cases, could this be used? Social Security checkup. A married person who never added on her spousal benefit after her husband filed for his benefit. Yeah, I mean, that's just a fact. You could get a spousal benefit that might be more than your own. Absolutely. And you need to get it for sure. Real cases, could this be you? A divorced person who did not know she could claim a benefit off her ex-spouse. I guess, as long as you're married more than 10 years. Look at that for sure. Could this be you? A divorced person whose ex-spouse is now deceased, making her eligible for a survivor benefit, which is higher than her own benefit. Yes, as long as you've been married for more than 10 years. I tell you, all that stuff. If you're divorced and you're married for more than 10 years, you really need to be looking at your Social Security stuff. That's just all there is to it. Social Security checkup. Yeah, definitely need to review your Social Security for sure. Social Security is too important for guesswork. All right, so let me go back here. That's the updates for 2019, and I'm a big fan. We're going to stop that there. Larry Kotlikoff over at, is he writing for Forbes? I think so. Forbes at maximizemysocialsecurity.com. He has software on Social Security planning. Wonderful. Reading my man Devin Carroll's Social Security 2019 basic benefits for Social Security 2019. I'll put a link to the show notes. Kotlikoff, Devin Carroll, and I'm missing somebody else. Obviously, Elaine we're talking about here. Mark, what's the guy's name? Mark Orr. He's local here too, and I'll put a link to his book in the show notes too. Social Security is a big deal. If you're not educated on it, you're making a mistake. If you're just solely relying on financial advisors, you're making a big mistake. Just not that many financial advisors are attuned to how Social Security works. I'm just telling you they're not. So you got to take it on your own to figure this stuff out. All right. So stay tuned. We'll go again more in detail on this as we go forward. If you have questions, thoughts, concerns, let me know. Comments, thumbs up in the show notes. Share this video with people, please. And we'll see you next time at the Heritage Wealth Planning YouTube channel. Thanks, guys.